I think when we talk about C2C marketplaces, we're talking about platforms that kind of host and maybe charge a cost for those listings. So they get their supply, so to say, from households and aggregators and businesses that are looking to sell on the marketplace, because the marketplace has done the hard job of building a marketplace where you kind of have buyers and sellers meeting each other. Now, there are differences here. There's like national, region-wide marketplaces, and then there's more local ones. So you might have things like eBay, which is a national one, or Vinted, which is a national level marketplace, or even cross nations, where you reach a wider audience immediately, where some local operators might be, I don't know, Olio or similar, that focus on local recommerce and facilitating, for example, a more local exchange of goods. The heavy lifting that these players do is especially this kind of trust building and usually shipping related convenience factors that if you buy, there's maybe some authentication services involved, and maybe the marketplace might even hold the stock in a warehouse, so you don't have to wait for someone to kind of buy. There's a various like levels of servitization that are there. And then they cover these costs by their take rates, which are then 10 to 30% from the actual goods being sold through the system.
And I assume that the challenge of getting the buyers and also sellers in this case to participate in these marketplaces, they have to invest a lot on their brand.
Yeah, it's from a marketplace playbooks are notoriously hard. Because let's say at the maturity, it's a nice business model. At best case, you don't hold any stock and you just facilitate transactions and get your share for those, and you can have a quite nice gross margin profile. But to get there might be 10, 20 years a journey. And it's often this kind of chicken and egg problem that you first need the supply in order to get the demand, and you need the demand to get the supply. So because your kind of core value proposition is saying that, hey, I'm gonna bring the supply a lot of demand. So if you post your products at our marketplace, I'm gonna get you a sale in, I don't know, a day or so. Because that's at the end of the day the core reason why someone would post in a marketplace. Or then you say that, hey, we do a bunch of operational heavy lifting. We authenticate or we refurbish or all of these things, which are of course super costly to set up at scale and so on. So the same rules apply, yeah. So it's kind of, you need to invest to get yourself up and running. And marketplaces maybe, if you bootstrap, probably you bootstrap a super local marketplace, because it's maybe a bit easier to facilitate the whole supply and demand matchmaking.
And another way is probably to go quite niche on something. So, for example, focusing just on fashion items like Vinted or electronics or some type of collectibles.
Yeah, definitely. Like the more niche you go, then you can kind of cut through the noise. It's hard to be a general purpose marketplace. So eBay is probably that's the value of eBay, that they reach that brand that if you want to sell items, you think about eBay. The more niche you go, your kind of potential market becomes smaller, but maybe inside the niche there's variations. So everyday clothing, super low average order value per transaction. It's harder to secure enough gross margin to cover shipping and all of the costs. So you quite quickly end up doing like bulk sale or similar. Whereas if you go to high value goods, like you're the marketplace for high-end design watches, there the like individual sale can be, or it probably is, in thousands. So there it's easier per sale to get the needed gross margin to cover the costs of matchmaking between supply and demand and a transaction. But yeah, then your total volume might go down.
And what is the size of this marketplace segment?
it's estimated to be anything from like 150 to 220 billion. So it's kind of, you could say it's depending a bit, but 5-10x of the corporate e-commerce or 5x of the whole B2C commerce. But there's a key difference there. It's of course the take rate. So the gross merchandise volume over this is that, let's say 200 billion, but the marketplace of course just kind of gets only 10 to 30% of that. So from a marketplace's perspective, the market size might be 20 billion or so. Whereas in corporate e-commerce, of course, the corporate kind of owns the whole sale because it's done through their own channels and they don't pay any commissions to any facilitative players. Or if they do so, then they've kind of extended their offering somehow. But yeah, it's a lot larger market when you look at that from a cross merchandise volume perspective, but then take rate adjusted, it's roughly on the same size as the corporate e-commerce.
And does this 150 to 200 billion estimate also include some large purchases that can be, for example, cars or homes?
We've in these numbers we've left cars and houses out because they are, well, cars is such a big industry that and quite established industry. So maybe in terms of Recommerce, it is definitely Recommerce. It's about selling used cars and so on. But yeah, it's a good highlight that in these numbers we've left those out to talk about maybe the less established industries. Houses, kind of the same, and they are one of the like main assets that a human tends to acquire, or at least historically has acquired during their lifetime.
And these are probably the segments that maybe haven't seen similar growth as some of the other ones, as they have already been quite mature for a long time.
They're super mature, and I think it seems like you could, on average, say that the higher the higher value the individual asset has, the more mature that market tends to be. Because if you have high value assets that are not needed by you anymore, you tend to be more likely to sell those. So that's usually the lower you go in value, the less established marketplaces you tend to have, or let's say niche marketplaces.